Welcome, everyone. Before we dig in, I'd like to share a few key points. I will welcome questions, so please feel free to add them in the chat. I'll take them at the end to respect everyone's time. As I often do for these presentations, I'd like to invite you to a complimentary one-on-one meeting at a later date. During this meeting, we'll assess your home buying readiness and look at your path forward. We can discuss this following the presentation. So let's begin. Navigating the current housing market is no simple task. Complexities abound, especially for newcomers to the real estate market. Recognizing the obstacles is your first step, and today I want to equip you with the knowledge and tools to tackle this process confidently. Let's discuss some of the hurdles you're going to encounter. As I'm sure you're aware, competition is fierce out there, and there are bidding wars on houses that already start at high prices, and all-cash buyers are often participating in these wars. By and large, housing stock is at a very low level, and there are even more limited number of starter homes available. Once you buy a home, we often find out we have underestimated ownership costs and are inadequately prepared for the financial side of home ownership. And that's just the tip of the iceberg. The mortgage process can be overwhelming, especially when you're trying to make sure you've adequately weighed the benefits of buying or renting, or partnering with a family, or whether to dig into your retirement accounts if you have them. I can help you wade through a lot of these decisions. Buying your first home seems more complicated than ever before, but you'll soon see that you can achieve home ownership by understanding the full process. And this brings us to our first insight. A sound financial plan that prioritizes savings, debt, and lifestyle can make home ownership achievable in today's challenging marketplace. An honest look at your current financial situation will reveal what you can realistically afford for a home. Next, let's address your home buying budget. Plan on closing costs running between 2 and 6% of the loan. So, for example, a $250,000 house, closing costs may vary between $5,000 and $15,000. You'll also want to explore home buying assistance programs, which we can address here shortly. Now, the idea of a down payment can seem daunting. It's a one-time payment to show the bank that you're serious, and most of it ends up being equity in your home once you purchase it. This can be anywhere from 5 to 20% of the purchase price, and can go as low as 3.5% with some loan assistance from someone like the FHA. So we'll figure out how you'll get there in 3 steps. And this will involve a little bit of calculations, but that's math. No one said there'd be a quiz on this. So first, we want to take a look at your down payment. How are we going to get there? Taking a look at the money you saved up plus any emergency fund. 2, is there any expected assistance with your down payment? There are programs out there that we can take a look at for you afterwards. And 3, what is compound growth and why does it matter? Well, compound growth is when you receive interest on your initial savings deposit. Then you receive interest on top of that interest. When you steadily add to your savings through automatic transfers or otherwise, your savings can grow exponentially. But you've got this, and when we meet one-on-one, we can work through it together for you. Next is debt to income ratio. It's a critical metric that lenders use to assess your buying or borrowing ability. It's a measure of your income to your monthly debt you carry. So, for example, if you have a $5,000 monthly income with $1,500 in monthly debt, you have a 30% DTI. Now, a low DTI makes you a more attractive borrower. A high DTI means you're more of a risk to the lender. Many lenders want to see you have a DTI of 36% or less, with no more than 28 to 35% of your income going towards your mortgage. If we work together, I can help you ensure that your finances meet the mortgage criteria before you even apply. Now, there are support programs out there that I referred to earlier. There are many federal, state, and local programs available to help first-time buyers, and these are just a few. If you're interested, put your name down in the chat and I'll send you a much more comprehensive list than we got here. You may be thinking, wow, this does seem like a lot. Won't my real estate agent help me with all these tasks? This brings us to our second insight. Professionals guiding you through the home buying journey have distinct roles, loyalties, and motivations, and understanding each of these is simply critical. You may have heard the news about the rule changes for real estate agent commissions that become effective this summer. An industry organization settled legal claims on commissions paid to sellers' agents. This will end the specific policy governing most real estate agents' commissions and how they're handled. In the past, the seller's agent received a commission from the home sale price and shared part of that with the buyer's agent. So you, the buyer, didn't pay your agent directly. The commissions were built into the home price. For most agents, that will no longer be the case. What does this likely mean for you? Well, buyers will save money in this transaction, and you'll end up with more control over what you pay for and the services you get from your agent. You'll get to negotiate commissions directly with the agent, which may add another layer of complexity to the hiring process. This is another area where we can help you out and guide you through the process when that time comes. We don't know how this will play out across the U.S. with different agents, but a majority of them are going to adopt the new rules this summer, so we'll keep you updated as developments change. Now, there are different types of agents out there, such as a dual agent. That's one agent from the same company who handles both sides of the sale. The benefit to this is it does simplify communication and potentially streamlines the process. There is a potential for conflict of interest, and they're rather controversial, and quite honestly, they're illegal in several states as well. It does reduce your advocacy, so you or the buyer are not being fully represented. Now, there's a designated dual agents, which are two or more agents from the same real estate firm, one for the buyer and one for the seller. A potential conflict of interest still remains since one firm receives the commission from both sides of the sale, which raises questions about objectivity. This could go away because of the new rules on agent compensation. It's essential to know your agent type to ensure the best outcome for you, the buyer. Now let's talk about financing. Mortgage lenders assess your finances and identify loans for you, presents loan options, and guides you through the loan process. And it aims to provide competitive rates and terms for you. It's important that we understand the types of lenders that there are. You've got banks and credit unions, online lenders, mortgage brokers. It's important to understand that there are essential characteristics and how they can meet your financing needs. Now, online lenders, for example, your bank may have an online mortgage portal where you can check different rates and terms offered. So you want to check that as well as the big online lenders such as Rocket Mortgage, First Mortgage Direct, and Zillow Home Mortgage. Some are specialized in various types of buyers such as vets or through Veterans United, and unique employment scenarios such as the self-employed. Your mortgage broker examples are people like LendingTree, Loan Depot, and Loan Factory. You need to protect your property, and the mortgage lenders require that you carry homeowner's insurance. It's always a good idea since it protects not only your interests, but those of the bank. Factors that could affect the cost of the policy are things like the roof. If it's 10 years or more old, you're probably going to need to put one on fairly soon. Do you have a swimming pool? That will certainly affect the cost of insurance. And how close are you to water for flood damage? So you'll need to pick up flood insurance on that. A good home inspection can help you save money on your purchase. Recommend necessary repairs or modifications before the sale and save you a lot of headaches later. A pro tip for you is even if the home inspector sees no sign of pests, pay the nominal fee and get that inspection. They can miss things, and depending upon where you live, certain pest inspections are mandatory. Now, your primary responsibility is to ensure all legal and financial conditions are met before the property and funds exchange hands. It represents your interest during the closing, is the final step in the transaction where your ownership is legally transferred from buyer to seller. There are many documents to sign and the financials are settled, and you receive the keys to your new home. Here are all the significant milestones along the way with the professionals who will help you. If you're interested, put your name down in the chat. I have a copy of this that I can more than happy to email to you when we are done. Now, you might say this all makes sense, but it sounds a bit overwhelming. This brings us to our third insight for today. A comprehensive Homeownership plans boost confidence and steadies emotions, enables intelligent decisions. Home will be to plan, monitor, evaluate, and refine as you go along. It's important to consider the costs that come with home. There's property taxes that you'll need to account for. Those are paid annually and usually based on the location and the value of the house. They run about $2,400 a year. Homeowners insurance varies based on many factors, and the average around the country is anywhere from $2,200 to $3,800. You need to account for homeowners association fees. Those can be anywhere from $200 to $700 a month. It can be a big chunk of change. Of course, there's mortgage insurance if you don't put down a large down payment. That can be anywhere from 0.5 to 5% of the original loan value. Moving costs can be anywhere from $680 to $20,000, depending upon the type and the distance of the move, or if you've got some really good friends who would give up a weekend. For a roof or appliance replacement and emergency repairs. My pro tip for you is to have the seller buy a 1-year home warranty to convey to you as the buyer. My wife and I, when we first bought our first couple houses, it was a nicety, and now it's almost a necessity for the seller to purchase a warranty so that the buyer doesn't have to worry about the refrigerator dying or the oven going bad after a couple months, and then you're out shelling out even more money. Remember to account for additional expenses like landscaping, pest control, seasonal maintenance costs. These costs can add up over time and should be factored into your overall homeownership budget. Now, before we move on, please remember life happens and you may have to pause your savings at some point, and that's simply okay. Here are 4 things that you can consider doing. Make up for lost time by implementing a savings catch-up plan, by setting aside a larger portion of your income for a certain period of time. Explore opportunities for earning additional income through side hustles, freelance work, and selling unwanted items to boost your savings. Maybe you need to reevaluate your budget to identify areas where you can temporarily reduce expenses and allocate more funds towards savings goals. Consider adjusting your timeline for home ownership to allow you to save more. Okay, we're getting towards the close and the finish here. So let's review some of what we've discussed so far. Got our 3 main insights up on the slide, so take a look at those if you need to. Take a picture for yourself to remember for later. Now, you may be wondering, what is the best way to get started? Well, I have a solution that I invite you to consider. Here's our solution. Engaging a financial strategist early will streamline your path to homeownership with clarity and confidence. You're not alone in this process, especially if you feel uncertain. In fact, 95% of prospective homebuyers face barriers to ownership, and 42% feel like they lack the support and advice, and they just don't know where to start. But most, 88% of people agree that the journey, as complex as it may be, is well worth the while. If this is right for you, I'm here to help you prepare your financials for the next milestone in your home buying process. As I mentioned at the beginning, I'd like to offer you a complimentary one-on-one meeting to address your questions and concerns. We'll use a detailed checklist to help you assess your current situation in the home buying process and determine what your next best step is. I've got a link to my calendar in the chat session for you. Thank you. Now, I'd like to open it up for questions. Done.